In today's video, we're going to be going over the Homebuyers Choice Mortgage with Navy Federal Credit Union. This loan is a zero-down loan program that's conventional mortgage, and it doesn't require you to come out of pocket up to 3, 5, or 20% in order to purchase a home. Now, a couple things about this mortgage: you do not have to be a first-time homebuyer in order to qualify for it. There's a lot of information out there on different websites that says this is perfect for first-time homebuyers, but I actually put a call in to Navy Fed just to kind of ask a few questions about the program and make sure that I was giving you up-to-date information. And they did confirm that you don't have to be a first-time homebuyer in order to qualify for this. This loan is perfect for you if you are just looking to buy a home with no money down and not having to completely drain your savings account in order to purchase a property. Now, with typical conventional mortgages, they require at least 3 to 5% down with a minimum of 20% down in order to avoid PMI, or private mortgage insurance. Now, PMI is a private mortgage insurance that actually it does nothing for you. It just protects the lender in case you default on the loan. It's basically saying, hey, we're putting our faith and trust in this person, but we're not sure if they're going to make their mortgage payment, so we're going to make them pay a monthly payment in order to protect ourselves and our interest in the property. Now, before you rush out to Navy Fed's website and do a pre-approval form, please note that pre-approvals are only good for 90 days, so you don't want to go out and rush into doing a pre-approval or pre-qual if you are not ready to pull the trigger on house shopping and house hunting. This can actually ding your credit because they would have to do another hard pull on your credit report after the 90 days in order to lock you in on a specific rate. And if you're not ready, you're just not ready. So you definitely don't want to go ahead and have them pull it for no apparent reason. Now, here's some facts about this mortgage. Again, you have no PMI. Now, PMI can cost as much as $50 to $150 to $300. FHA loans only require 3% down, but they have some of the most expensive PMI out of all the mortgages that you can get. So the fact that this mortgage does not require PMI is really awesome. But what they do require is what's called a funding fee. And funding fees are paid a few different ways. Their funding fee for this Homebuyer's Choice program is 1.75% of the loan. So you can either bring that to the closing table and pay it in cash along with any closing costs that you might incur. You can finance it into the loan, so they can roll that into the loan. Now, this extra option might change, and please note that everything that I'm telling you right now could change. Terms and conditions, all that stuff, they're updated regularly. So as of the time of this recording, right now you also have the option of increasing your interest rate by 0.375% in order to avoid that funding fee. So basically, you're increasing the amount of interest that you pay over the term of the loan, which could be 15 to 30 years, just to avoid that 1.75%. The final option is to actually put 3% down minimum on the house. So if you can come up with the money to put at least 3% down, you're going to be able to avoid that 1.75% funding fee, which is, think about it. If you can come up with an extra 1.25%, you're really doing well on this mortgage program. So how does this look? If you are buying a $300,000 house and you have decided to roll that funding fee into the loan, your amount of your loan would be approximately $305,000, and your mortgage payments with principal and interest would be about $1,430 per month, and then taxes and insurance vary based on your location, how high risk you are for different things like wind damage, tornadoes, hurricanes, and things like that. So you want to compare different rates with insurers in your area for a home similar to yours before you start budgeting for your property. Now, what about the closing costs, right? Everybody wants to know how much closing costs are. Can the seller pay the closing costs? How does this all work? Now, with closing costs, I'll tell you up front, you cannot roll the closing costs into the loan. So even if the house appraises for more than what the asking price was, you can't take and roll that into the loan. They don't allow it. But the seller can pay up to 6% of your closing costs on this loan program. So if you have a $300,000 loan, the seller could technically pay up to $15,000 towards the closing costs. And based on my area, I've done a little bit of estimating and checking with people, and our closing costs could be anywhere between $10,000 to $11,000 in my area on a $300,000 house. I'm not being sponsored by Navy Federal Credit Union on this video. We moved to an area where there are Navy feds everywhere, and once we found out that we were able to actually join the credit union without being military, my ears perked up because I knew about this Homebuyers Choice program, and I thought, hey, that's a really good program. That's a great option for a lot of people, and I'd like to learn more about it. So if you haven't seen our story, we moved here from Illinois back in May of 2020, right in the middle of the pandemic. I mean, when it was hot, when it was really, really bad. And we sold our house in Illinois, and with the equity that we had in our home and some savings, we were able to pay off about $63,000 worth of debt. It's crazy to even say that number out loud, but I'm so grateful for that. But as a result, we've drained a whole lot of our savings. So looking at something like a Homebuyers Choice program where we don't have to drain the rest of our savings in order to purchase a home, it's really kind of exciting to think about. So who benefits from this loan? People who are looking to get into a house with no money down and save some of their savings for a rainy day, for an emergency fund, for their kids' school events. The worst decision that you can do is to completely drain your entire savings account and have nothing left over once you've purchased a home. Because lo and behold, you're going to buy that house and the heating and air conditioning unit is going to go out. The roof is going to leak and you're going to have plumbing issues in the bathroom. It just is a fact that happens. It's Murphy's Law. Whatever can go wrong is going to go wrong. It's going to happen in threes. Now, this loan program is not for people who are living paycheck to paycheck and struggling to get by. If you're looking to buy a house with no money down just because you don't have a lot of money and you can't afford a security deposit, then obviously this is not the program for you. What you need to do is really sit down and create an awesome budget that you can stick to every single paycheck, not even every single month, but budget by every single paycheck and get a plan for getting rid of that debt, increasing your income, and just really getting in a better place financially so that you can purchase a home. And don't be discouraged, okay? Homeownership is one of the best investments that you can make. It's going to pay you back more dividends than almost any other investment product possibly could. That being said, if you have to wait 2 to 3 to 4 years or more in order to purchase a property and you're thinking, oh, I'm paying $1,500 a month rent and I'm throwing my rent out the window and it's just all a waste, that's not quite true. Of course, you're paying the landlord's mortgage, but at the same time, that first 3 to 5 to 6 years of owning a home, most of the mortgage payment is interest only. So you're not even hardly putting a dent in the principal that first few years. So of course, if you can get started earlier, it's better, but don't be discouraged if you're not able to buy a house right now because mortgage rates are so low. Also note that the Federal Reserve said, hey, we're not going to raise rates until after 2023. So you have the opportunity to really work on your finances for the next couple of years. So this brings me to my next point. How can you join Navy Federal Credit Union as a civilian? Go check out my next video. I'll share exactly how to do it, quick and easy, and I will see you guys in the next video.